Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TS MACD Pro traders. The title of the video is How to Master MACD Indicator Part 2. Alright. In this video, we're going to concentrate, on the characteristic of MACD indicator. What type of technical indicator is MACD, all right? And how we can avoid trading mistakes, focusing on the characteristic of the MACD itself, all right? I have here the MACD 12.26.9. This is the standard MACD indicator. MACD stands for moving average, convergence, divergence. All right. The first characteristic of MACD is a trading tool. MACD is a trending technical indicators. All right. So when the price is trending up, the price will be in a rising channel. When the price is trending down, the price will be, in a declining channel. But we have three market patterns: the rising channel, the declining channel, and the horizontal channel. Because MACD is a trending technical indicator, it does not perform very well when the price is consolidating or when we have a balanced market or an horizontal channel. All right. So in order to avoid the trading mistakes, one must always remember that MACD is a trending tool. Therefore, we must use MACD during the trending phase. Also, when we are using MACD during the balanced market or the horizontal channel, we need to be careful because MACD is likely to give us a lot of false signal. So for this point of view, we want to concentrate on the two market patterns that align with the first characteristic of MACD, a trending momentum indicator, the rising channel and the declining channel. I have here on my chart, you can see in this section here, I have an horizontal channel. You see here, I will try to color it now into red. And I want you to concentrate on the MACD itself, So in order to filter out MACD false signal, one wants to understand the first characteristic of MACD, which is that it is a trending technical indicator. So it will not perform very well when we are in a declining channel. All right. So look at this section here. You can see that if I put a vertical line there, put a vertical line there, and also another vertical line here. And now I want you to switch your attention to MACD during that. You see here, it was above the signal line, and then quickly come back down below his signal line, and then went back above it quickly here, and change the direction again, and then went up again above it, and then quickly come back down, and then went up again. All right? Because this is the challenging time for MACD as the market is consolidating. This is not the best time to use MACD. But because I'm on a 3-day chart, on a 3-day chart, there's something else we can do to help us, trade during this period. So we on a 3-day chart, we see that the price consolidating on a 3-day chart. But if we switch our time frame, for instance, to the 4-hour chart, all right, we will see that while we are still in a consolidation phase on a 3-day chart, on a 4-hour chart, while the price going up here, we will have a rising channel on the 4-hour chart. So instead of using the MACD on a 3-day chart, because we have a consolidating market pattern on a 3-day chart, as soon as the price starts displaying high-low in a new channel like this small channel here, we can switch our time frame, for instance, to the 4-hour chart, 2-day chart, 4-hour chart, 2-hour chart, something like that, and we may see a beautiful rising channel. So instead of using the MACD on the 3-day chart, we may decide to use the MACD on the 4-hour chart or on the 2-hour chart. Remember, when MACD is above the signal line, it's telling us that the price must be above a rising channel. But as the price is above a rising channel, it is very important for us, if we want to buy, that the price displays a higher high before displaying a higher low. That condition must be fulfilled. A higher high followed by a higher low. This is a bullish setup. Then we will use the trading drill, the setup, the signal, and the low risk entry point. So based on the characteristic of the MACD is a trending technical indicator. You can see here that it's a bit crazy for somebody using MACD on the this time frame. That's why some traders think that MACD is useless. They prefer the slow stochastic. But at the end of the day, because if one is trading an indicator, one will make a mistake, but if one is concentrating on the price, one will make a better decision. So here we have a consolidation. During the consolidation phase, we want to look for opportunity to buy, from the third low, on the lower part of the channel, and look for opportunity to sell from the third high on the upper side of the rising channel. So in this scenario, as you can see here, there was this low here, another low here, and here we will start looking for opportunity. There was this first low, second low. So from the third touch of the horizontal channel here, we can look for opportunity to buy. But because on this 3-day chart, we have a consolidating market pattern, we will switch our time frame, for instance, 4-hour chart, 2-hour chart, to see a beautiful rising channel. If we want to use MACD, we want to use MACD when the market pattern is a rising channel. But as we are in a rising channel, it is very important for us at the time when we are about to enter the trade, that we see a higher low, a higher high, followed by a higher low on the edge of the rising channel. If we are also in a horizontal channel like this, we can also sell from the top, as I told you. So here you can see that the price did not touch the upper side, which is a bit risky for us. So if this trend line was broken, it went above it, couldn't touch it here. But in a normal condition, repeat, in a normal condition, if the price were here, we will use MACD again. So here we see a consolidation pattern. We'll change time frame again. So the first thing that we want to check, how is the price trending? Is the financial instrument trending? If the financial instrument is trending, MACD will be very useful for us, provided that we see a pullback after a higher low. If you are in a downtrend, which means the price is in a declining channels, trending down, if it's trending, we will see lower lows and lower highs. We want to look for opportunity to sell on the edge of a lower high by applying the trading drill. To avoid MACD trading mistakes, one must always align the characteristic of MACD with the two specific market patterns, the rising channel and a declining channel. Here you can see we have a rising channel here on a 3-day chart. It's telling me that the price, displaying high, low, high, high. But I want to buy on the lower part of the channel. I will not jump on it here. But you see here, when it's running like this on a 3-day chart, you can switch time frame, 4-hour chart, 2-hour chart, to see a better channel where the price will pull back on the edge of another common set trend line. So you see here, this section here, see how it's running fast. Sometimes they say it's running fast. How do I handle that? Change time frame, leave the line like this on your time frame, and then go to another time frame and wait for a pullback on the edge of the new common set trend line on that time frame. Higher high, pullback on the edge, displaying higher low. Do not forget to check the economy news and the fundamental, aligning the technical trading and the fundamentals. All right? So whenever you are using MACD, check the market pattern. The next thing that I need to explain to traders here, you are using MACD, do not go, for instance, to the 30-minute chart. Now I'm going to go to the lower time frame. I'll go instead to the hourly time frame. The hourly MACD is a beautiful MACD. All right, I will explain to you another part of this video. There is a correlation between MACD and the slow stochastic. Okay. All right, my data is not showing here. What is it? What's going on here? Okay, 1 second, please. I'll get back there. Okay, go back. I'm trying to get to the hourly chart. Here we are. We're on the hourly chart, for instance. Okay, you're on the hourly chart. The MACD on the hourly chart is quite good. The same rules apply. Okay. All right. If it's in a declining channel, you want to sell on the edge, a rally on the edge. Okay. So the point I want to make, the validation of a setup, okay? So MACD is rising up on the hourly chart. Do not stop on the hourly chart time frame. You want the hourly chart, go to the daily chart, 2-day chart, 3-day chart, draw the support, resistance trend line on the higher time frame before switching to the hourly chart. I'm going to say this again. Do not come to the hourly chart just using MACD like this, ups and down. Go from at least daily chart, okay? 2-day chart, higher time frame. If you are too lazy, at least from the 4-hour chart, draw the levels, okay, the support, resistance levels, all right, before switching to the hourly chart. So here you see it was going up big time here on the 4-hour chart. It pulled back on the edge like this. If, for instance, this is a buying zone after a higher low, we have a higher, after a higher high, okay, the price pull back on the edge of this trend line. If I go to the hourly chart here on the edge and MACD crosses above a signal line, I will look for opportunity to buy. So here I'm combining the 4-hour chart on the hourly chart. Do not go and use MACD on one single time frame. This is another mistake that traders are making. All right? Do not do that. Go from a higher time frame. Okay, so you want to trade MACD on a 30-minute chart. Okay, you see MACD cross above a signal line or below a signal line, check the higher time frame. Are we on the edge? We don't want to violate the market pattern from another time frame. For instance, the market pattern is horizontal, as I'm showing you here, all right? So, on a 3-day chart, we know that the market pattern in this session was horizontal, all right? Was horizontal, all right? So, you don't want to be buying on the top here, all right? So, if you were trading on the hourly chart, you will see a smaller channel like this going up, and a smaller channel when it was going down here, another smaller channel going up on the hourly chart. So you want to start from the higher time frame, draw the line, before switching to a lower time frame. The MACD signal line can be replaced by the common sense trend line along the price itself. All right? So to avoid MACD trading mistake, we want to, this is the second part of this video, we want to align the market patterns with the MACD first characteristic, which means MACD is a trending indicator. Another thing I need to say to traders that is very important, the MACD, the standard MACD 12, 26, 9 can be replaced by the moving average 8 and 20. The crossover, moving average 8 and 20 crossovers can replace MACD crosses above and below its signal line. All right? If I put on my chart, let's see if I can do it now. I'm going to put moving average. I'll use, in this case, because MACD is a lagging indicator, I'll use exponential moving average, okay? I can use the simple moving average, but because MACD is a lagging indicator, I will use instead, okay, I will use instead the exponential moving average. So I'm going to put on my chart, okay, 2 moving averages, and one will be moving average 8, and the other one will be moving average 20. The crossover between moving average 8 and moving average 20 is almost identical to MACD crossing above and below a signal line. I need to remind traders that I'm talking here about the standard MACD 12, 26, 9. If I change that setting, the correlation between the moving average 20 and 8 crossover will not be equal to any other MACD. It's only when we are using the MACD 12.26.9, we can replace the crossover of MACD signal line with the crossover between the moving average 8 and the moving average 20. I will be, recording another video about that, in the future, when I will explain to traders, what I meant by that, That's it. So on my chart here, you can see I have a moving average 8, which is the blue line. I hope you can see on the chart too many blue line. That's the moving average 8. Okay, see here. Here, MACD was ahead of the crossover, but finally, MACD, the moving average 8 crossed the ball below the moving average 20. But here is because, as I explained to you already, that's something else, Here you can see this section here, very often, I say almost equal. Here you can see, because I'm using the exponential moving average, you can see here, the 8 goes above the moving average 20, all right? And MACD, finally, MACD is a lagging indicator. Normally, this one should cross before you see, and MACD crosses above the signal line at the same time, almost in the same zone, but because MACD is a lagging indicator, it happened later, If we see a volatility in the market, we will see that here there was a volatility. See this tall candle, There's a distortion of MACD, so that correlation may fail if MACD is distorted or we have a high volatility. But in a normal market, the correlation between the crossover between 8 and 20 and MACD and its X signal line is almost identical. Now, one thing you need to understand, why is almost identical, The reason is we are using MACD 12. All right, we are using MACD 12, that's why we are using 8 and 20. The difference between 8 and 20, 20 minus 8 is 12. So when you are seeing two moving average crossover, we are using moving average 8 and 20, we are measuring the momentum of moving average 12. You see the difference between 8 and 20 is 12. So when you are using the crossover between 8 and 20, in fact what you are doing, you are analyzing the moving average 12, the momentum of the moving average 12. So when the 8 is above the 20, is telling us that the momentum of the moving average 12 is increasing. When the 8 is below 20, is telling us that the momentum of moving average 12 is also the bullish momentum is diminishing, or the bearish momentum of the moving average 12 is increasing. That's why we can substitute MACD crossing above the signal line or below the signal line with the moving average 8 and 20 crossovers. Ladies and gentlemen, this is the end of the video. The most important thing I want you to remember in this video is about the market pattern. The first characteristic of MACD is a trending tool. It performs better during a trending phase. All right, traders who understand the area wave will use the MACD more accurately. All right, first wave, second wave. The first corrective wave is completed. MACD crosses above signal line. We can look for opportunity to buy. Trading drill, set up signal, low risk entry point. All right. All right. Very, very important. MACD also is a trending tool. If there will be a trend, it's likely to start from a cycle point, or a value support level, or a value resistance level. Very often, MACD crossing above or below a signal line near the moving average 200 usually is excellent signal, because the moving average 200 is a highly respected support and resistance, dynamic support and resistance level. So you want to use MACD around key levels. The best signal that MACD gives very often, when we see a double bottom and MACD crosses above the signal line, usually is a valid signal. Double bottom, MACD crosses above the signal line is an excellent bullish setup. Double top, MACD crosses below the signal line is an excellent bearish setup. Again, we want to use the trading deal to set up the signal and low risk entry point without ignoring the fundamentals and the economy news. Thank you for watching, and we will speak to you very soon. We are the TS MACD Pro talking about how to trade MACD indicator. Okay, part 2.